Hello guys, welcome to the Trading Parrot. As you can see, the 4-hour time frame broke down over the weekend. We noticed weakness at around 85k, and I'm closely still monitoring this ascending wedge that so far is promising some downside. We'll look into the news that are currently causing this effect, but of course we'll keep it real because there is the motivation to go into the 89k. So in my opinion, any bullishness coming from the general markets, giving some that additional confidence, can bring the price to 89. But if things fail, the risk to the downside is pretty big as well. I'll give you an update on my order, what's my current position in the market, and I'll share an update on pre-market prices for general markets. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. Can we get to 1,000 likes once again in a single video? That is the main question for today. And thanks so much to all the people that took advantage so far of the 50% discount that runs out on the 15th of April. Many people went for all Pine scripts, and we're getting our first new users of our Telegram bot. And I can see people are already using the bot. You can see that you can just click on one chart. Someone is already using it. Pretty cool. You can click and just get your chart straight away. We are doing currently the same. That is gonna automatically go to my actual chart and share it on Telegram, which is really beautiful. And last night I was working a little bit on my super AI bot that is going to be able also to explain the charts for you and do a lot of more in the future. So if you want to be an early adopter and get all these goodies at 50% early adopter price, be quick, I will say. And yesterday I was saying in the Sunday Alpha video that the interest in Bitcoin seems to have taken another hit to the 21s. Every time that we are getting close for a breakout of retail interest into the 36, closer to the 40s, we go back to 20s, which is really disappointing. And I really cannot blame them because the amount of uncertainty is just exhausting in this market. Pretty much there's not a single day of the week that we are not hearing something worse coming in. This article says trade war versus record M2 money supply, 5 things we need to know in Bitcoin this week. Bitcoin traders are cautious about a new trade war prices. That doesn't surprise me, while BTC price action faces a key downtrend breakout challenge as the new week begins. They're talking about not being successful in the breakout. I'm not sure what they're talking about. At least on the daily time frame, we're gonna look what's the health of that breakout. But spoiler alert, I still don't see a fake out. Tariffs are the key macroeconomic topic of the week as risk assets brace for potential surprise headlines. The ETFs lost 100 million in a week. We've been looking at the head and shoulders, and I think if things get ugly, and this is not necessarily my forecast, we got already on the table a head and shoulders in the total cumulative flows of the ETFs, and this has already been 800 million down. They say in a week, so that probably is from here to here. Despite the tariff pressures, the weakness of the US dollar could be a blessing in disguise for Bitcoin and risky assets. Global M2 money supply is at an all-time high and rising. Will Bitcoin follow history and replicate its past? And I have to say, I'm pretty tired of looking at Twitter. It seems that everybody's so desperate for some hopium that it's almost impossible to navigate my timeline without stamping into posts about M2, look, M2, we are about to break out. And then the next tweet is, hey, the tariffs are hell, we are going to hell. It's just so exhausting. A few days ago, the chart was looking like this, and I'm convinced that on the daily there is a breakout. We are in the stage of having to defend the breakout, which is called the retest confirmation. And regardless of how people are placing the line in here on the daily time frame for the breakout, in this case they're pointing it out as a rejection. In my chart on the RSI, it still shows as the bulls are defending the breakout, but we'll look into that just in a second. For now, I just want to see what other people are thinking. For example, this other chart is showing it as the breakout working, although the line is not really well placed. Come on, you can do better, Rect Capital. And I'm sure you heard about this news, which is really disheartening. The Mantra Chain token, OM, experienced a drastic drop of over 90% in its market value within 1 hour, reducing its market cap from approximately 5.9 billion to under 600 million. This event was triggered by what Mantra describes as reckless liquidations. To me, this doesn't necessarily look like liquidations only. I mean, I've seen liquidations, right? A liquidation can get you into the next level of support, from 6 to 4, that's a 50% decline. But being at support and then suddenly going 94% down, that is just not liquidation. There must be something else in here. I don't buy the idea. I mean, there are liquidations in all crypto assets. Why only Mantra experience something like this, while the rest of the coins are just having a mild correction? You see, everybody's in the red with just -3, -2, -5. And reckless liquidations, I guess, is the way of calling it. Liquidations together with insider selling. There must be something dodgy as well there. I don't buy it. The team is denying that this is not caused by them. I've seen some people in my Telegram group thinking, should we enter in a long now on this sort of coins? Personally, I just put it in my blacklist and I move on to something else. And I guess the most important news, or the one that hasn't happened but that has the potential to move the markets the most, is Trump set to detail semiconductor tariffs this week. And I'm interested to know when could that be happening, because definitely that's gonna keep the markets suppressed, waiting for a resolution of this. And even if we get all the things that are good or bad, things are not really gonna move much until we hear what crazy thing is next. He just said over the next week. That could be anything. And I guess the amount of flexibility to certain companies can determine what happens next to general markets and therefore to crypto assets. But I suspect there is a lot of political gaming in here, mixed with heavy narcissism, cockiness about I control everything, I know everything. So at some point in the day, he might step back, but the day after, his appetite for showing off might have a comeback, and there we are bouncing between one side to the other as traders and investors. Goldman Sachs forecasts gold at 4.5K, and the market reacts. Obviously, having a call for such a high price of gold means that there is an extension of the uncertainty. Gold prices are spiking thanks to all these fears. It's being used as a safe haven to hedge against uncertainties. My previous call was for 3.5K, and we are on our way to that. Gold hits 3.235, a new all-time high, record high. And let's remember the context with Bitcoin, which we mentioned yesterday in the video as well. Once gold tops, the typical pattern is that some of that liquidity goes into Bitcoin. The key is to spot the actual top of gold, because that tends to be as well in the early phase of another rally. In our cycle from 1, 2, 3, 4, 5, gold has been already in a long move. So if we are in the fifth wave, we need to be looking for an exit from gold and a new entry to Bitcoin. But notice that the wave 5 in 2020 was very early, right? It was around September, August in 2020, and it allowed Bitcoin to move a lot higher because there was still timing for that to happen. 2020 is a halving year, in 2021 is a topping year, therefore you get all the room to move up minus the shift down that COVID produced. Whereas where we are in here, we already have multiple waves up of Bitcoin from 15K to over 100K. They've been running together, so this wave 5, the effect that we should be expecting, don't overestimate it with all these arrows that there is in here. That is just silly, right? We are not starting the bull market. We are ending the bull market, and we are looking for the highest price we can get. If you mimic these arrows in here, well, you should be expecting millions of dollars in the price of Bitcoin to come, and good luck with that. And I want to show you something here in the liquidity that is sneaky and interesting. So from around 17th of February, the liquidity in crypto has been only coming down. Week by week, there is a delta that diminishes. And this week, particularly this week, is the first week that we see a candle slightly larger than the neighbor. Of course, 17 was a spike relative to January, but what I'm saying is that from mid-February, all we've been doing is going down except for this week. Let's look at CME gaps formed this weekend, and we got a very, very small one that ends at around 84,100. That coincides with this high in there, so that's just literally from 429, so just $400 down to around 83,978, and then it's gone the gap. The tool is drawing it from around here, so yes, just a 400. And the market opened this morning and it took Wednesday gap, that is from the 2nd of April. We had it all the way there on the weekend. We probably visit that area, but since CME was closed, it was only until 3 a.m. when CME actually opened that we went back up to close the gap. So apart from those $400, the only gap that we have left is to the downside at around 54K. On April, we are still in the positive 2.22%. Let's place this now as a resistance around 62 to see what needs to happen to reclaim the falling wedge on the momentum. So that is going to be 62. So price needs to break beyond 85,350 and close above that, not just pinch it like we are doing in this area, but close above it so the RSI comes back in this area. From this point is very low likely really to get outside. Do not discard it because there is the 89. The 89 is the motivation to do this thing that is against the physics. At the moment, we are losing momentum. We are defining a channel to the downside, and there is 10-20% chances that we spike all the way up and we re-enter. The best we can do in here is just to meet maybe with the 63 in here as part of a revenge rally. Let's place that at 63 just to have some extra room. So that is 85,456. We already pinched that in here. That was at 2 a.m. So if we do that again and we close above that level, that's a sign that this was a fake out and that we could still kick again into the 89 and take that liquidity. The median using percentiles coincidentally is at RSI 50. So I'm gonna place this in here to remind me that I'm interested in RSI 50. And let's use the lower one as support or as next target to the downside, which is 83,177. Let's go to the daily time frame and let's see how good we are doing with the breakout. Remember, with the left-hand side of your brain, you now need to think about this breakdown on the 4-hour and the effect it can have. A mild effect is going into 83.2 and holding there. A bullish effect is closing above 85,456 and carry on into the top, getting into 87, and maybe thanks to a bearish divergence, still reach out for the 89 and kill those shorts at the moment. That is low likely. Most likely we are in a channel down and we're gonna hit 83 and potentially lose that level. So now we need to transfer that from the left side of your brain into the right hand of your brain. I'm trying to get you to think in multi-time frame. So what are we doing on the daily? We are in this larger time frame, we are doing the retest and we are evaluating how low we are gonna go in that retest. And the 4 hours helping us to assess what sort of retest we want in the daily. Can we go to 83 and still say that the daily is retesting? Sure, you can see that from the point of view of the falling wedge, we can go up to 81,100. And personally, I'm still gonna say that we are defending the breakout, even there. We could even enter below it and go to 79 as long as we close back above 81,166. I'm still gonna say, well, today we are pending from a threat, but we are still defending the falling wedge breakout. To the upside, we have 87.5, that is the 200 MA that coincides on the 4-hour with RSI 70, which is this kind of target that we've been looking into for a potential unlikely punch to the upside at this point. And the inverse head and shoulders that managed to break out from a neck of RSI 50 on the daily, we are retesting the breakout, right? We went all the way to 53. We are defending 50. If now we put a new higher high in here after the 4-hour finds that bottoming process, then we could still go into 64, which is the target of the inverse head and shoulders, that today is priced as a target at around 93,700, a little bit lower than yesterday. Moving target. We recently have a bull cross on the MACD and the momentum continues to increase day by day. So as we see this positiveness on the daily, on the 4-hour, we're looking for a healthy retest. If it's an unhealthy one and we continue with that channel down, let's defend the 81. Now, knowing those numbers and knowing what needs to happen in each direction, we look at liquidation levels and we look at the order book. We do some forensic analysis and we see what we think has more likelihood to happen. On the weekly, I got amazing news. On one side, we reclaimed the support of 8,400. That is the level that we wanted to reclaim. Now we need to defend it. We need to confront the bull market support band and tell, hey, we're just going to go through into 92, into the middle of the range on the weekly. Let's not fail hitting the bull market support band. Let's not continue using it as a resistance because that can cause an actual ugly breakdown of the weekly support. On the RSI, we got closing price yesterday, so we need to look at this. What happened? Well, remember we had two challenges. Challenge number one is to confront the dotted downward sloping resistance. Could we break above it? No, we closed right at the resistance against that line. Second job we had was to reclaim this yellow line that we lost. That was at around RSI 50. We ended up closing at 48.65. That is the candle close on the weekly RSI. This week we're pointing up. So if we continue to creep up, by Sunday we could reclaim both. Another good thing is that we close the weekly reclaiming that RSI of 44 that has held the RSI for most of the bull market. And that is bullish. How bullish is the situation with all of this mixed on the weekly? Well, it's pretty bullish. We got the reclaim of the support in the price action. We got the reclaim of the 44. We were very close to enter into the dark area of the RSI for a cycle. Is it incredibly bullish? No. Incredibly bullish will have been if we are above RSI 50. Can we do that next week? Possibly. We just need to keep Trump happy. Someone needs to entertain him, distract him. I'm just joking, but well, pretty much that's what we need, don't we? And look at what's going on the weekly stochastic RSI. We close still with the mouth open, but this week in the candle in progress, we are potentially producing a bullish cross. We are pretty much doing the same as 2024, which was bear cross, bull cross, bear cross, bull cross for the whole stupid year. And for my W pattern with a neckline placed at 86,200, you can see that we are doing great progress in here to form that double bottom formation. The year is still in the red, guys, in a topping year, spending pretty much 4 months and we are still in the red. That's unprecedented. Look at the topping year of 2017 or 2021. That's supposedly always been a green year. Yeah, sure, every year is less, like 2013 is huge, 2017 is smaller, 2021 looks like a disaster, but well, hey, what if we close the year just flat, the same price we enter? We go up, we go down, but we end up closing flat, just to follow this trend, right? Keep squashing the topping year. And CPR, we can see that we are still trapped in this fight to reclaim the pivots. The volume is about to cross the zero line. The model says, well, reclaim and go for 92,900. Long-term holders are now pointing up. They continue to just go sideways. Very small fluctuations in this area. Big Whale Explorer ended up fully settling in there. We got a spike of $40,000 deposits from big whales. That means that we are in a period that they have the hand in the trigger. They could execute that as a market sell anytime from here. Yes, it didn't end up closing as high as 1.5 on the first day. That's what it was showing on the stochastic. When you get to a ratio of 2, you know that they're looking to distribute as all of the stops in here. We are still in fear at 31. We decline a little bit from 45 on Sunday. And on Sunday, we didn't close Cerberus in a buy. We have a buy signal, but that is again not confirmed. Last week, we had another buy, but it didn't settle. Okay, liquidation levels. At the moment, short-term liquidation pools are mostly towards the upside, okay? We got this big chunk in here at 86, and then we have the 89 that ends almost at 90. Below the price, we have from around 82,600, and the last green is 81. So we have a recipe. If things are bearish in general markets, if markets open lower than Friday, to just grab that area in here. And that could be all that's needed to do the retest, a successful retest and upside. Or we could leave that on the table. We don't have to take it. It's just that the 4-hour shows that the momentum on the weekly kind of drained, and we put a breakdown. So if we respect that breakdown, that is what is on the table. If we don't, we have next those levels, 86 and 89. If we were to do that 89 on the daily, we can complete the double bottom formation now on the daily. On the 4-hour, we already had it, and that was on the 6th of April until 9th of April. If you've been watching my video, you know we were chasing this double bottom formation, and we actually traded. If the double bottom formation on the daily fails, if it doesn't manage to break out from here, or if it breaks out and it's a fake out and it still comes back down, the risk is literally this area in here. That is the longer term risk at the moment. Although I have to say, if we complete the double bottom on the daily, we have an increase in liquidation pool sizes. Starting from 89, we get a big spike, then 100, then 108, and everything just continues to increase up until 124. Looking at the 1 month on CoinGlass, we can see that we have that 90. That is the motivation at the moment to kick higher regardless of the ascending wedge, which is a bearish pattern that has already broken down. If we don't respect the pattern, 90 is on the table. If we do, the ascending wedge has a target to go to the bottom of the wedge. Now, if we have actually flipped bullish, if we believe we have flipped bullish, we should not go to the bottom of the wedge. We should not do the full technical breakdown. We should stop at 81. That is the level that we discussed earlier. So I am in my short. And if we go lower now into 82, 81, I am considering to close my short depending on why we are going there. If we are going there in the middle of the week and there is really nothing going on and it's just profit taking or liquidation cascade, I take profits. If something broke in general markets and we are crashing big because Trump say the perfect, beautiful, romantic words that everybody wants to hear, then I might stick to my short all the way to new lows. Having said that, at 81 is a great opportunity to enter in a long as well, assuming that you manage the risk that I'm already explaining. Let's look at the past 30 days on liquidation maps, and that 81,800 is pretty big, isn't it? The biggest of the past 30 days, but again, that kick to the upside can get you into 87 and 89. If you are confused with all of this, just listen to what I'm doing, right? I am in a short, planning to add at that 89, at that 90, at some point, based on what happens at that day. Make sure that you're following me on Telegram, Instagram, and Twitter to get notified. Or if you want to support the channel, join Just BTC Articles for $10 a month and be always the first to get notified of my moves and get summaries of the articles. Okay, we're gonna get now into the order book and see what's going on. We can see that the longs are pushing back up. They're coming back from lows of 42 over the weekend. There was very low volume on the weekend, as it's always expected. Now they are coming back at 48, 49, but still pretty far from 70s. Those are areas that typically we get that amount of longs when the price is coming down and they want to rescue the price, buy the dip. They started, for example, in here on the double bottom, and they've been doing nothing but pulling out into 85, 86. Now they're getting interested again, but 50 is kind of in the low of the range, meaning that we don't have much caution at the moment defending this level. The ask remains in the red all the weekend and still at the beginning of the day, but it's starting to become a bit flat, meaning that we have kind of a balance of limit orders to buy and sell in the close proximity of the price. No alpha there. And we still have 500k of delta. That means that there's tons of liquidations in the close proximity of the price relative to the upside. That's on the downside. Those are longs that are risking liquidation. And it's one of the reasons why I stick to my short as well, regardless of these clouds that are slightly further away at 90k. Let's look at the order book, and you can see that there is resistance at 92. They want to short that level, and 88. And support is at around 81. So that 81 is resonating a lot. Let's confirm that on Trading Light we have the 86, 87 with tons of selling orders, support at 81 to 100 again. And we are at the top of the range of longs versus shorts in this area. That's the delta. And at this area I tend to look for shorts. At this area I tend to look for longs. Fair value gaps to the upside, we only have this thin one at 86, and then we run out of them. We enter in the vacuum that can catapult the price into 95k. If we were to hold in these areas and rally, that should be something very quick. We can get rid of this or move it to that thin air of fair value gap. We got 82, 80, 78. That one is gone as well. This one is still on the table. Let's move this further away to here. And that 69 is right there. So if we were to go to the thickest, closest fair value gap, that is around 80k at the moment. General markets closed on Friday in the green. That really helped Bitcoin to go to 85 and take the CME gap. Let's see pre-market prices, what's going on at the moment. The dollar continues on the downside, and gold, if we were to close the week like this at 3.2k, we will get a hive signal. Hive signals on gold have played out pretty well. There was a drawdown of 9% on this one. This one had a drawdown of around 5%, and we are kind of going towards my target on the RSI weekly, but every push is smaller. So yes, we are retesting the breakout in here, but I'm also curious if this could potentially break down to the downside in here. So I'm gonna leave this line to see if we can protect this rally. Let's call it like that, because what I wanna see is that we really get into 85 to that target. But the risk is doing a rollover here and then a breakdown on gold, in which case we might not fully achieve the 3.5k target. We need to adapt to markets, guys. We put targets, but the main reason we look at the charts so often is because there's always an evolving story and pieces of the puzzle start coming in every week. This is a weekly chart, so the least that you can do for yourself is to look at the weekly chart once a week. VIX leaves a gap in here, but it continues to the downside into 33. So I wonder if there's gonna be now a push back up into 37. We closed Nasdaq at 18,690 and now we are at 18,947. So Nasdaq is pushing up into the next resistance. S&P on pre-market is also 7 points higher than the close on Friday. So there is some positiveness at the moment that if it remains like that, that could challenge on the 4-hour the breakdown. You can see a rolling up in here. We are trying to do a revenge against that 63. Let's keep an eye because that revenge could get oversized and hit the 89 if general markets really support that direction. With this pre-market move up, all it takes is really some cold news about the tariffs to rug pull what we are currently seeing in the charts and then do continue with the channel down, which the theory says, well, once you're in a channel down, you are in a channel down. Guys, currently I'm hosting a position airdrop of $500 on Bybit. There's a link at the top of the description to claim it. With those $500, you literally can trade any of the coins on the screen. They give you a position of $500 for a margin, I believe, of $20, and then you can keep the profits. If you don't want to use KYC, notice that Bybit now is still available in Europe to many users, and they're about to have a European actual version of Bybit as well. If you want to stay out of KYC, that's okay. You can go with Bluffin. My link in the description at the moment is offering up to 10% cashback, and you can even win a Rolex. Either of the links in the description guarantee you the lowest fees to trade on those exchanges and support the channel. Thanks so much for watching. Let me know in the comments, what are you currently expecting for this week? Is this the week where we reclaim 90K and we go back up? Or there's still a little bit more downside to be had? I still believe that there is a final shake-off. Even in late 2024, there was one with a higher low that freaked out everybody. Having said that, I still think in 2025 there's going to be a big move up. Anyways, I'll see you in the next one. Bye-bye.